Bitcoin analysis over the last 3 weeks has been on point. So it's very highly probable it's going to follow traditional, typical textbook Elliott wave and Fibonacci price patterns. And we are going to look at the last 3 Bitcoin videos and what's likely, with very high probability of likely to happen next before a potential big correction. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive into Bitcoin. First things first, let's now just quickly dive into the date, April 3rd. We're going to look at April 3rd. We are going to look at our video from April 10th, and then we're going to look at our video on April 22nd. Because what I really want to get across today is how powerful Elliott waves and Fibonacci can be in projecting in advance of what's very likely to occur with very, very high probability, so you can make business-like, non-emotional, objective decisions. So you're 2 steps ahead of the market as opposed to the rest of the herd, which is 2 steps behind. So what we said initially was with Bitcoin, we're doing this typical ABC correction, and we're likely to see a correction to the downside, right? We said downside is very highly probable based on the psychological mood of what's been shown in the price action. Keep in mind, Elliott waves moves in 5s and 3s, as in pattern. Price action tends to move in 5s and 3s. And when we see a 3-wave correction like this is what we're talking about here, this A, B, C. What likely is there's a top normally made and then a reversal, and that's what this blue arrow represents. So what happened next? So we did our next video. So this was on April 3rd. We did our next video on April 10th. So literally a week later, and look at what happened. Look at what happened. Now again, there's method to the madness. The top was made, and we made this movement to the downside. And what we said was, all right, after a movement like this to the downside, what typically occurs is this movement to the downside moves in 5 microwaves, right? And we're going to touch upon that now, because we're getting quite intricate. It's relatively advanced because you can look at the charts from a macro perspective, like a really large picture perspective. But now we're going to zoom in and see what's likely to happen over the next 7 to 14 days. So we said, it was unfolded, so that's great. And then on the April 22nd, did a video and said, okay, we just zoomed back in, and it's like, okay, this looks like it has formed this 1, 2, 3. We said looks like it should be forming a 4 and then a 5. And this is what I mean by a 5-wave, 5s and 3s. So we are now literally have formed this type of pattern, and we are roughly around here, and the market has moved up. So what we're going to do next is we are going to move into a live chart with Bitcoin, because it's just following just like textbook 5-wave patterns. After a 5-wave should be a 3-wave correction. So we want to look at what should that correction look like, what is it likely to look like. Keeping in mind it's always probabilities and never certainties. Very, very important. And if you're new to Elliott wave and Fibonacci and you want to learn the real basic fundamental, just the foundation, take my free Elliott wave and Fibonacci masterclass. Is in the link below. You'll get taken to this page, and when you click on this link down here, free Elliott wave and Fibonacci masterclass, you'll get instant access. Instant access. Click yes, show me how, and I cover the 3 rules, really getting familiar with 5s and 3s. And you'll see it. Once you get this basic training, you'll see this pattern unfold time and time again. And when you see it, you can act in advance as opposed to being, because a lot of people buy at the top and sell at the bottom. Or if you do manage to buy at the bottom and the market takes off, most don't know when is a highly probable end of a trend and when you should be looking to take profits. And this is some of the benefits of Elliott waves and Fibonacci. It can be a really, really powerful leading tool, what's likely to happen in the near future. So now what we're going to do is we're going to jump into a live chart with Bitcoin. We're on a daily chart, and as we can see here, it's just textbook. This is like, it doesn't get much better than this. This is what you call a perfect 5-wave to the downside. Look at this. 1 ABC over 2. We got this 3 ABC over 4, and then we had this last leg down, just as anticipated. So this is what we are anticipating in this video over here, and it just unfolded just perfectly, right? And it doesn't mean it always unfolds perfectly, but in this particular case, it has, right? So now there's two things I want to initially talk about. First is, what's the first confirmation signal that this is the end of a micro 5-wave trend? Well, the first signal is going to be if the price goes above the previous swing high, which is the price going above. It is around $41,500 per Bitcoin. So this. But this initial move to the upside also gives us a signal because it's traded into the former range of the last swing low. So we go, okay, it's likely, not confirmed yet, but it's likely. So what today we're going to do is, if this is the low, what is likely to happen next? All right, well, I'm just going to get the help of a momentum indicator. Because what you would have noticed that I did, I think it was in the last video or the video before, or it was one of these videos. I think it was this one. Let me just forward it slightly. I think it was over here somewhere. I bring up a momentum indicator. Let me just find it. Here we go. This part here. Let it just load up. All right. What I said in this video was the momentum indicators are something called a lagging indicator. It takes past information, but it helps us measure the rhythm of the markets. And if it coincides with a pattern position in terms of Elliott waves, that 5-wave count, and some Fibonacci price, which we covered in a previous video, it can give us some really, really valuable information. So what I said in that last video was we should anticipate one more move to the downside, and it will probably coincide with a momentum indicator bullish reversal. And I highly recommend going back and watching that video. It was the last video. It was the one on April 22nd. April 22nd. Yeah. So we said we should be patient. So if you're looking to buy Bitcoin short term, or whatever your trading strategy is, or if you're just using Bitcoin as a macro, wait for the next bullish reversal. And what we got was the next bullish reversal. So this is exactly what I was talking about here. This next bullish reversal, we got it over here. This was on between the 24th and 25th, and you can see that's coincided with this low over here. So that's very helpful for us. So, because what we want to do is use the information available to make objective, non-emotional decisions. All right, so now let's just make the assumption that this is the low. What's likely and typical to happen next? So what typically happens is something called a correction. And a wave 2 is a corrective wave. And what we should anticipate and prepare for is some bullish movements to the upside. However, with a correction, it means that the previous major swing high should not get exceeded. If it does, we need to reevaluate. But it's highly probable that Bitcoin will not go above 48,000. Let's just get the closing price is 47,500. It should not. If it does, we need to reevaluate. So now let's just do a couple of things. I'm gonna just keep it quite basic. I'm gonna do two main things. First, we're gonna do a Fibonacci retracement, and we're making the, it's not confirmed yet. Important to note, but if it does hold as this low, I'm gonna put a question mark here just so we're very, very clear. I'm saying this is not confirmed, right? So we're saying it looks like an end of a wave 5 on a micro on the bigger degree. So we do a Fibonacci retracement. So most wave 2s typically would move up in a range, and there's three particular ratios you want to be aware of. The typical minimum is 50%, 62, and 78.6%. So 78.6% is the typical maximum. And then I'm also going to do something that I don't know if most people are aware of this. It's called, let me just see, which one's the low? Here's the low. It's called Fibonacci time. We can measure time. What's the typical time taken for a typical correction, what we should anticipate as a minimum. So we should anticipate 3 moves to the upside, normally 3 waves, and it will normally be something like this. I'm going to keep it like this. Let's keep it on micro, and we'll do this. It'll typically be something like this. So we should anticipate Bitcoin moving sideways to up until at least May 6th to May 18th. So we're talking about 2-3 weeks of sideways to up, but it's a correction. Unless some other information comes about, unless this high over here gets exceeded, this is the high probability outcome. Also keeping in mind that the weekly momentum is bearish. Let me just So the main thing I want to finish on to give you a bit of perspective of what you should anticipate, doesn't mean it's going to happen, just what you should anticipate, is after a three-wave correction, you should get a continuation of the prior trend. So the prior micro trend is this five-wave sequence to the downside. So after a three-wave sequence to a correction, you should get a continuation to the downside. So my expectations for the market is that we will go below 39,000 again with Bitcoin. And if that does occur, we will do a more up-to-date analysis to see where is this likely to go. If for some reason it does go above here, we will keep that in mind because anything is possible. But it's highly probable that we're going to see this outcome. So we can draw a nice pink. I like to draw these pink boxes. There we go. Time and price. Bitcoin between 6th of May and 18th of May to go between 43,300 to 45,600, thereabouts, in that range. And then we just need to be hyper aware. We'll look at how the pattern unfolds. And if it is unfolding textbook like this, this is where you need to be very, very careful. Because if this does unfold like this movement to the downside will be very bearish for the entire crypto market, especially if we break this low and it goes below some other particular supports as well. Then just be mindful. Finishing a positive. We're going to just zoom out to give the macro perspective of what I'm anticipating happening on a macro degree, meaning just like the large picture perspective is. I know there's a lot going on in this chart. Let me just hide this for a second. Let me just do it like this. All right. So the macro picture that I'm seeing is we've got this. Let me do it like this. We've got this movement to the downside. We know that. That's very, very clear. We've had this ABC correction. I'm anticipating a continuation to the downside. And at some point, the correction to finish. And then a continuation of the former trend. Now, that's not confirmed, but the immediate part you want to be paying attention to is this part here. We are likely to have this downward movement, probably until mid-June. And if we do get that, that's around 2 months, around 6 to 8, maybe even 10 weeks, sideways to down, which we need to be very hyper aware of. If we break this high, however, then we can reevaluate. But until that occurs, the high probability is to the downside, to this side here. It's not what I want to happen, but it's what's likely to happen. So if you want to learn more about the method to the madness of really seeing these identifiable patterns in advance, take my free Elliott Wave and Fibonacci Masterclass. It's in the link below. It'll give you instant access. I'm telling you, it's the most powerful tool and methodology of reading the crowd psychology, which is reflected in the price. It takes into consideration all the fundamentals, all the news, the roadmaps, the announcements, the market sentiment, everything, where you can just keep it really, really simple of just going pattern, price, momentum. When those three really combine, the probability of it occurring is very high, and therefore you become the casino. So the whole idea of this game is you get the edge, and then you act with that edge time and time again. So if you like today's video, like, subscribe, hit the bell notification. Let's finish on a quote. In the spirit of simplicity, we're going to go with chapter 5. We're going to go with Leonardo da Vinci. Simplicity is the ultimate sophistication. Now, there's so much information when you're looking at a chart. Any chart, whether it's Bitcoin, whether it's a microcap, whether it's an altcoin, there's fundamentals, there's tokenomics, there's the team, there's the roadmap, there's Newpool, there's fear and greed index. There's so much. And sometimes people get paralysis by over-analysis. So there's too much information. Ideally, what you want is the right amount of information, the 20% that's going to give you the 80% result. And what I've found with my over a decade worth of experience, most of it was actually in the Forex markets, the currency markets, not cryptocurrency, the currency markets. But now it applies even better to the cryptocurrency market because the psychology is more raw, it's more to the surface, and it's much more younger. So it's reflected much better in the price, is to have something really simple, that's consistent and objective. And my, by far, favorite for reading the markets is momentum, pattern, price. Momentum, using those momentum indicators that we saw at the bottom. Pattern, well, there's all types of patterns, but the best by far is Elliott waves. If you know the basics and the rules and the guidelines, it's just different level, because you can see what's like to happen in the grander context of what's happening with the market sentiment and the sentiment towards that project, the psychological mood of all the mass participants betting on the price, speculating on the price, and then combine that with key Fibonacci ratios, which tells you the relationships with particular waves, and it gives you a very high probability outcome. And you would have seen in the last 3 videos, we did the analysis on Bitcoin, and the last one on 22nd, the one on the 10th of April, and the one on the 3rd of April were just on point. And you go back and look at those, and it's just following, it's just textbook. It just doesn't get much better than that. So we should go with what's likely to occur next is just the next typical iteration of a 3-wave correction, and so on and so forth. I know there's a lot of information there, but take the Fibonacci Elliott Wave Masterclass. I break it down into layman's terms, really simple, at a steady pace, so you can really understand some of the key fundamentals that you should be leveraging, and leveraging those tools all the time. Like, subscribe, hit the bell notification. I appreciate you, and I'll see you soon.